In the middle of last week, market sentiment shifted rapidly following news of a ceasefire between the United States and Iran. Major equity indices not only gapped higher at the open, but also reclaimed both their 50-day and 200-day moving averages within the same trading session, an indication of notably strong technical momentum. That said, the geopolitical backdrop remains fluid, with considerable uncertainty still surrounding further developments. From a pure price action perspective, the key question is whether such a move is sufficient to confirm a trend reversal and the start of a new upward trajectory. Looking back to 1950, the S&P 500 has registered similar instances where it gapped up and simultaneously reclaimed both the 50-day and 200-day moving averages, only around 8 times. This underscores the rarity of such a signal in technical analysis. More importantly, historical data suggests that in the subsequent 1 to 3 months, roughly 20 to 70 trading days, market performance has tended to skew negative. In most cases, the average return during this period is below zero. In other words, despite the apparent strength of the breakout, such episodes are often accompanied by heightened short-term volatility, including profit-taking pressure, and a tendency for the initial gap to be partially or fully filled. However, when the observation horizon is extended to approximately 6 months, around 120 trading days, the pattern becomes more constructive. Returns tend to stabilize and shift into positive territory, while the probability of gains increases. At this stage, the broader market dynamic typically evolves into a phase of recovery, often characterized by consolidation at elevated levels. Taken together, historical precedent suggests that U.S. equities are more likely to undergo a period of near-term consolidation before resuming strength, rather than entering an immediate and sustained one-sided rally.
Thanks for watching. That's all for today's update. Don't forget to like, subscribe, and hit the notification bell for more in-depth market analysis. See you next time.